sovereign wealth funds control more money than many countries combined, and their hidden tactics are reshaping markets worldwide. From silent stakeholders to massive infrastructure pushes, you won't believe how far their reach goes. Stay tuned for number 1. Imagine a fund pouring billions into bridges, ports, and railways across continents, reshaping the very backbone of global trade. By targeting critical logistics hubs, sovereign wealth funds secure long-term revenue streams while boosting the economies that host them. These projects often come with preferential financing terms, allowing the funds to earn stable returns that outweigh typical market volatility. In places like Southeast Asia and the Middle East, such investments have accelerated urbanization and attracted further private capital, creating a multiplier effect. Analysts note that the sheer scale of these deals can sway regional development plans, nudging governments toward policies that favor the fund's interests. The result is a network of assets that not only generate cash, but also grant geopolitical leverage. And coming up, a tech-centric move that's turning startups into tomorrow's giants.
Surprisingly, sovereign wealth funds have become some of the most aggressive backers of early-stage technology firms, betting on the next wave of digital disruption. By allocating capital to AI, fintech, and clean energy startups, they aim to capture outsized growth while diversifying away from traditional assets. These funds often partner with venture capital firms, providing not just money but also credibility that helps startups secure additional rounds. In return, the funds gain equity stakes that could appreciate dramatically as the companies scale. Some estimates suggest that tech-focused allocations now represent a double-digit percentage of many funds' portfolios, a shift from their historically conservative stance. This strategy also gives them insight into emerging trends, allowing them to adjust broader investment approaches accordingly. The ripple effect can be seen in global innovation hubs, where sovereign backing accelerates product development and market entry. Next, we'll explore how these funds are snapping up prime real estate worldwide.
According to recent reports, sovereign wealth funds own a staggering share of premium commercial and residential properties across major cities, from New York's skyscrapers to London's historic districts. By buying office towers, shopping malls, and luxury apartments, they secure steady rental income and long-term capital appreciation. Their deep pockets enable bulk purchases that push prices upward, often reshaping local real estate markets. Moreover, many funds adopt a hands-on management style, renovating properties to increase value and attract high-end tenants. Critics argue that such concentration can limit housing affordability, yet supporters claim the funds bring stability during market downturns. The scale of these holdings also grants the funds leverage in urban planning discussions, influencing zoning laws and infrastructure projects. As the portfolio expands, the next tier of influence lies in the energy sector, where they're securing vital resources for the future.
Few people know that sovereign wealth funds have quietly become major shareholders in both fossil fuel giants and renewable energy pioneers. By holding significant positions in oil, gas, and emerging clean energy companies, they hedge against the volatility of any single energy source. This dual approach allows them to benefit from short-term price spikes while positioning themselves for the long-term transition to greener power. In many cases, the funds use their voting rights to push for better environmental, social, and governance (ESG) practices, nudging companies toward lower carbon footprints. Their involvement also helps stabilize financing for large-scale projects that might otherwise struggle to attract private capital. While the exact percentages vary, some funds reportedly own upwards of 5% of major oil corporations, alongside comparable stakes in leading solar developers. The next move we'll examine is how these funds influence sovereign bond markets worldwide.
Hidden within their massive balance sheets, sovereign wealth funds regularly buy government bonds, providing essential liquidity to national treasuries while earning reliable yields. By targeting bonds from both stable economies and emerging markets, they balance risk and reward, often acting as a stabilizing force during periods of fiscal stress. Their purchases can lower borrowing costs for governments, effectively subsidizing public projects and social programs. Conversely, when funds shift away from a country's debt, markets can react sharply, highlighting the subtle power these investors wield. Some analysts estimate that sovereign wealth fund holdings in global sovereign debt exceed $1 trillion, a figure that rivals the combined holdings of many private pension funds. This influence extends to shaping monetary policy discussions, as central banks monitor fund activity to gauge market confidence. Up next, we'll see how they constantly rebalance diversified portfolios to stay ahead of the curve.
Deep within their investment committees, sovereign wealth funds employ sophisticated algorithms to constantly rebalance across asset classes, ensuring optimal risk-adjusted returns. By shifting between equities, real assets, private equity, and alternative investments, they adapt to macroeconomic trends and geopolitical shifts. This dynamic approach helps them avoid overexposure to any single market, protecting against sudden downturns. For example, during periods of heightened inflation, many funds increase allocations to commodities and real estate, while scaling back on fixed income holdings. Their sheer scale means that even modest rebalancing moves can move markets, prompting other investors to follow suit. Transparency varies, but most funds publish annual reports outlining strategic asset allocation targets, offering a glimpse into their long-term vision. The next tier of influence involves leveraging shareholder rights to shape corporate governance worldwide.
Remarkably, sovereign wealth funds use their sizable equity stakes to sway corporate decisions, from board appointments to strategic pivots. By exercising voting rights, they can champion policies that align with long-term national interests, such as sustainable practices or local job creation. In several high-profile cases, funds have successfully pushed for leadership changes or forced companies to divest from controversial projects. This subtle form of political leverage allows them to extend influence beyond pure financial returns, embedding national priorities into multinational strategies. Critics sometimes view this as overreach, yet supporters argue that responsible stewardship benefits both shareholders and broader societies. While the exact impact is often opaque, the trend underscores a growing convergence of finance and geopolitics. Next, we'll explore how funds intervene directly in currency markets to stabilize national economies.
Unexpectedly, many sovereign wealth funds maintain dedicated teams that intervene in foreign exchange markets to smooth out excessive volatility in their home currencies. By buying or selling large volumes of foreign assets, they can influence exchange rates, supporting export competitiveness and preventing sudden capital outflows. These actions are typically coordinated with central banks, though the funds often act independently to protect the value of their overseas investments. While the exact scale of such operations is rarely disclosed, analysts estimate that coordinated interventions can involve tens of billions of dollars, enough to shift market sentiment. This capability adds another layer to their strategic toolkit, allowing them to manage macroeconomic risks that could otherwise erode portfolio returns. Coming up, we'll see how they wield power over global commodity markets.
Statistically, sovereign wealth funds hold sizable positions in commodities ranging from oil and natural gas to precious metals and agricultural products. By securing long-term contracts in direct equity and extraction firms, they help stabilize supply chains for critical resources that underpin national economies. Their buying power can dampen price spikes during periods of scarcity, while also providing steady cash flows to fund domestic development projects. Some funds even establish dedicated commodity subsidiaries to manage these assets more efficiently. While exact percentages vary, several reports suggest that sovereign wealth funds collectively control a notable share of global commodity production capacity, giving them indirect influence over global price trends. Finally, we'll reveal the ultimate expression of their reach: direct ownership of multinational corporations.
Finally, at the pinnacle of influence, sovereign wealth funds outright own controlling stakes in some of the world's largest multinational corporations, from aerospace giants to consumer goods conglomerates. These ownership positions grant them board representation, strategic input, and a direct line to shape corporate direction on a global scale. By aligning corporate strategies with national economic goals, they can foster technology transfer, job creation, and export growth that directly benefits their home countries. Such holdings also provide massive dividend streams, reinforcing the fund's ability to invest further across the global economy. While the precise number of controlling stakes is closely guarded, estimates indicate that a handful of funds together own significant portions of companies that generate trillions in annual revenue. This ultimate level of ownership epitomizes how sovereign wealth funds are not just investors, but powerful architects of the modern economic landscape.
We've just uncovered how sovereign wealth funds are quietly steering everything from skyscrapers to startups, proving that their influence stretches far beyond simple finance. That's why keeping an eye on these powerful investors is essential for anyone wanting to understand tomorrow's markets. If you enjoyed this deep dive, hit the like button and subscribe so you don't miss the next mind-blowing list we drop each week. Which strategy left you the most surprised? The tech funding or the direct corporate ownership? Share your thoughts below. We love hearing from you.